Hi friends, this is Makaran. Welcome to the webinar series Demystifying Banking. Today our discussion is going to be on Swift messages for payments. In the beginning of the session I'll be briefing you about what is Swift. We'll discuss this till almost 40-45 minutes, and at the end of the session we'll have our questions and answers. So let's begin our discussion today on the Swift for payments. Now, before we discuss this Swift for payment, let me share this with you that our agenda for the day is what is Swift? Swift services to banks and corporates. The focus will be more on payments, obviously. Then we'll talk about Swift MTs, that is message types, and MX, the XML messages. Then I'll take you through some scenarios on Swift messages for payments. Now in this session, we'll not be able to take a deep dive because Swift is a very vast area to understand, and even if we look at one category of message, it may take us hours together to discuss only one type of message. So I'll be giving you an overview of what is Swift and how Swift operates, how Swift messages can be used for making payments. That is our agenda for the day. We are running many courses on the trainings in BFSI. Now let me first brief you about our company. This was established in 1996. It is engaged in consulting and training services, both in banking, financial services and investment, as well as business analysis and requirement engineering. We have various certification courses, and our popular certification courses so far as payments are concerned include the Certified International Payment Systems Professional, CIPSP. The second popular course is Certified Payment Processing Specialist, and the third popular course is the Certified Card Payment Systems Professional. Now many things are covered in detail in these courses. Now I'll take you back to the original agenda of the session. The agenda of the session is understanding Swift for payments. So let's begin the discussion. What is Swift? Swift is the Society for Worldwide Interbank Financial Telecommunications. Swift was formed in 1973. It is a member-owned cooperative through which the financial world conducts its business operations with speed, certainty and confidence. Typically it's a messaging service. It's a secure messaging service. There are a large number of players who use Swift. More than 10,800 financial institutions and corporations across the globe in over 200 countries today use Swift for messaging services. And this activity of providing messaging services involves the secure exchange of proprietary data while ensuring the confidentiality and integrity of the data. Now we are going to understand what is the role of Swift in the entire banking and financial sector. Swift provides proprietary communications platform, products and services that allow the customers to connect and exchange financial information securely and reliably. It also acts as the catalyst that brings the financial community together to work collaboratively to shape market practices, to define standards so far as messaging is concerned, and consider solutions to issues of mutual interest. It enables the customers to transmit data, move money through payment messages, and also automate the transaction. It helps in lowering the cost, reducing the operational risk, and eliminates the inefficiencies from the operations. So the role of Swift across the globe is to provide facilities of messaging in a secure manner. It has got its headquarters in Belgium and has offices in world's major financial centers and many of the developing markets. Swift does not hold any funds, nor does it manage accounts on behalf of the customers, or it does not store financial information on an ongoing basis. So when we speak about payments include three basic elements, three key elements, and the three key elements in payments is one, the message, second is the clearing and if required netting, and the third is settlement. Swift provides the first component, that is messaging. Swift does not provide any clearing services. Swift does not provide any settlement services. So it does not hold funds, neither does it manage any accounts on behalf of the banks or on behalf of the customers. So this basically is the role of Swift. Though we call it as Society for Worldwide Interbank Financial Telecommunications, it now does many more activities than purely provide interbank financial telecommunications. Now SWIFT is a major player in the message traffic. This is one example of message traffic. You are looking at the data of so many millions of messages over a past year. Now in February, they had roughly 25 million messages which were handled on a single day. They handle roughly 25 to 26 million messages, and the peak messages they handle was on 30th September 2014. On that day, SWIFT handled 25.87 million messages. So SWIFT is a carrier of messages, and it carries not only pure messages, it also carries information and messages in the respect of payments. And this is where you see the data about the payment messages. A large number of payment messages are also carried by SWIFT. SWIFT provides services for both banks and corporates. For banks, it has got typical 4 services. It has got more than this. I'm only looking at these 4. The first one is SwiftNet Fin. The second one is SwiftNet FileAct. The third one is the Interact, and the fourth one is the Browse. Let's understand the systems, that is Fin, FileAct, Interact, and Browse one by one. Fin is SWIFT's core store and forward messaging service. It enables over 8,300 financial institutions in more than 200 countries to exchange financial data in a secure, cost-effective, and reliable way. So it enables us to have a single message which can be formatted, created, and forwarded to the parties. It has also got certain value-added processing, which includes message validation to ensure messages are formatted according to the SWIFT message standards. It also monitors the delivery. You can prioritize the message. There is a process of message storage and message retrieval. Fin is based on a distributed processing architecture with full built-in redundancy to ensure maximum availability. It has got optional features like FinCopy and FinInform. FinCopy is used many a times in payment services, especially in places like RTGS or in clearing services. FinInform is used mainly to distribute information. The second product for banks is the FileAct. FileAct enables anyone having FileAct access to upload files. FileAct allows secure and reliable transfer of files and is typically used to exchange batches of structured financial messages and large reports. Now you may have netted systems or automated clearing houses or somebody like Step 2 in the single euro payment area. Now such systems, such clearing and settlement mechanisms may need bulk files, bulk data to be sent to them, and in that case FileAct can be used for transfer of data. FileAct supports tailored solutions for market infrastructure communities, closed user groups, and financial institutions. It is particularly suitable for bulk payments, securities value-added information and reporting, and even for central bank reporting and intra-institution reporting. The third one is Interact. Interact is, you can compare it with your normal internet banking. You use your internet to communicate with an application on the other side. In a similar way, a bank can use Interact to connect to its correspondent bank or to some clearing and settlement mechanism. Interact is designed to complement FileAct and Fin. It can support tailored solutions again for market infrastructures, closed user groups, and financial institutions. With Interact, you can upload a file or the data. Interact is also suited for some processes or systems like continuous link settlement. It also has got a system of enabling transactions through RTGS. The last one is SwiftNet Browse. Now this browse messaging service which is available is based on the HTTPS Internet Standard Protocol. This is also designed to complement FileAct and Interact. Herein, by using Browse, you can communicate with the other side. So it's like having a proper service where you can use SWIFT like through a standard internet browser like Microsoft Internet Explorer, and you can also use the Swift Alliance web station software. So typically these are the 4 products which could be used by a bank in order to use Swift services. Corporates also get services from Swift. The first one a corporate can get, and we are going to talk about, is the SCORE, the Standardized Corporate Environment. Standardized Corporate Environment is based on a closed user group administered by Swift, where corporates can interact with financial institutions. Now on the screen you have an example of corporate A and corporate B. If corporate A opts for SCORE, it is in a position to communicate with any bank on the other side, that is any bank who has got connectivity with Swift. So corporate A can communicate with bank A, bank B and bank C. Getting the admission to SCORE has certain prerequisites. To be eligible for SCORE, corporates must be listed on a regulated stock exchange of a country which is a member of the Financial Action Task Force. As you all know, FATF, the Financial Action Task Force, deals with the AML and the financing of terrorism related regulation. Subsidiaries of some companies can also join SCORE if they are majority owned by an eligible company, that is a listed company which is in one of the FATF countries. It also needs to have a proper or good financial standing, and the company which wants to become member of SCORE must be subject to regular audits in accordance with the internationally recognized accounting standards by an independent audit firm. So this is where we have a SCORE. Second scenario or second process through which a corporate can communicate with a bank is the member administered closed user group. On the screen you will see 2 types of MACUGs. The first one is the one-to-one CUG. This one-to-one CUG is created by the concerned member of Swift. The MACUGs can be used across markets like payments, cash management, treasury, derivatives, trade services and securities. You also have a second kind of CUG, that is a many-to-many CUG. In this many-to-many CUG, a couple of banks may come together and form their own CUG. Like the example which you have on the screen, there are 3 banks, bank A, B and C, which have come together and formed a CUG. Corporate A can then join a CUG which is operated by all these 3 banks. In other words, corporate A can now communicate with bank A, bank B or bank C. The advantage of this many-to-many CUG would be that corporate can communicate simultaneously with multiple banks, whereas in the one-to-one CUG which you see on the left hand side of your screen, you have one-to-one relationship, which means if you want to communicate with 3 banks, you must join the group of 3 banks. Next service which corporates can get is the TRCO, the Treasury Counterparty Model. The Treasury Counterparty Model will enable the corporates to send only the treasury deal confirmation, like the spot confirmation, the forward transaction confirmation, currency option or money market confirmation. Now TRCO model will allow a corporate to exchange these confirmations with any financial institution on Swift. That means there is no need to register in a closed user group. This model of TRCO can be used by both listed and non-listed companies. So this is how we have the services available to banks as well as to corporates. In other words, the corporates and the banks can communicate with each other using Swift. This also means that when a corporate wants to send a message to make payments, one of the channels which a corporate can use to send its payment related messages to the bank is the Swift. It also means that the bank can also communicate with corporates. So there is a service available for both the corporates and the bank to carry out the transactions through Swift networking, wherein messages or Swift messages would be exchanged. Now what are the types of messages which are available when we operate on Swift? The message types which are available when we operate on Swift are of 2 types. One is the MT, that is message type. Next one is the MX or the ISO 20022 XML based messages. In the MT categories, there are 9 categories, and category 0 is the system message. MT1 is the customer payment and checks category series. MT2 series is for financial institution transfer. MT3 series is for treasury markets. 4 is for collection and cash letters, 5 is for securities market, 6 is for treasury markets, 7 is for documented credits and guarantees, 8 is for traveler checks, and 9 is cash management and customer status. When we look at the payments domain, from payments domain perspective, 3 series are very important. Series MT1XX, MT2XX and MT9XX are important series from the perspective of payment. We'll be looking at the MT1 series, MT2 series and MT9 series in a little more detail during our session today. In addition to the MT messages, Swift also supports MX, that is XML based messages. XML messages include the ACMT, account management, ADMI, that is administration, CAMT, that is cash management, DFP, derivatives, PAX, payments clearing and settlements, PAIN, payment initiation, REDA is reference data, SEEV is securities even, and like that onwards. When we think about the payments domain from the perspective of MX messages, there are 3 types of MX messages which are important for payments. The first one is the PAIN, payment initiation. The second one is the PAX, that is payment clearing and settlement, and the third important one is the CAMT, the cash management message type. We'll also be looking at the PAIN, PAX and the CAMT during our session today. Now let's start our discussion first on the usage of Swift in the payments domain. Now it's not that Swift only provides the message and the messaging standards. Swift also provides backbone or the networking which is required for processing payments in different parts of the world. Swift provides the Swift copy mechanism. Popular one is the Y copy mechanism and the T copy mechanism. This Y and T copy mechanisms of Swift are used many times in the payment systems like the RTGS, the real-time gross settlement systems. So across the globe there are various places where Swift backbone or Swift network is used for high value payment system in a particular region or in a particular country. Let's have a look at a couple of examples. Target 2, the Trans-European Real-Time Gross Express Transfer System in the single euro payment area uses Swift for moving high value money across the single euro payment area, across the SEPA. Target 2 currently uses the message type, the empty types of messages while moving the money from place to place. Another system which uses the Swift for high value payments is the large value transfer system, LVTS, in Canada. Both the services use empty messages, but there are systems like the RTGS in India, which is operated by the Reserve Bank of India, that uses the MX message. Hong Kong also uses the Swift services for moving high value payments across the country. Swift is also used for bulk payment systems. So when you have automated clearing houses like the step 2, which is the pan-European automated clearing houses for bulk payments in single euro payment area, uses Swift. Now here it uses the MX messages mainly for making the payment. So Swift network and Swift facilities, Swift support, Swift backbone is available for high value payment systems and also for bulk payment system. Swift also provides message formats now for the card payment systems. So now you will find Swift providing the MX categories of messages for card payment systems. To summarize on this slide, let's say that Swift is not only providing the messaging facility, it also provides the backbone, the support services, the infrastructure which is required for high value payment systems, for bulk payment systems and also for card payment systems. Let's take an example of how Swift could be used for an RTGS scenario. Now I'm explaining to you the Y copy feature of Swift. In this scenario, we have a bank A who has a customer who wants to move money to another party which is having an account with bank B. and at the bottom of the screen you have got a larger box in red outline, which is the RTGS system operated by a central bank. This RTGS system has two servers or two processing centers, that is the central server and the main server. Now when a customer of bank A wants to move money to the customer of bank B in a real-time gross settlement way, we can use the Swift Y copy mechanism to send the money. This is how the messages would move. The message would move first from bank A to the RTGS system of that particular country. Now depending on the country, it could be an Swift empty message, like we said this could happen in target 2 in SEPA, or it could be an MX message, which can happen in a country like India, where the Reserve Bank of India uses the MX messages for moving the money. Again, depending upon the category of message, it could be a category 1 message in empties where a customer to customer transfer is being done. It could be a category 2 message in empties where a bank to bank transfer is being done. If you think of the Reserve Bank of India using the MX messages, the PAX messages, it could be a PAX 008 message if it's a customer to customer transfer, and it could be a PAX 009 message if it's a bank to bank transfer. Now depending on the scenario, the bank will send either empty message or the PAX message to the server. When the server receives this message, the message would have certain components. Now the components which would be included in the message will include who is the customer of bank A who wants to send money, who is the customer of bank B to whom this money is being sent. The third component is who is bank A. The fourth component is who is bank B. The fifth component is what is the currency. The sixth component is what is the amount, and the seventh component is what is the date on which we want to move this money. So every payment message will carry these 7 components. When bank A sends this message, these 7 components are now present in that message. The central bank would now receive this message, and at the central server, sometimes, not all the times, either the core subset of the message, that is only certain components of the RTGS message, may move to the main server, or in some countries the entire message may move to the main server. So the main server will now get a feed that bank A wants to transfer money to bank B. Once this message is processed by the main server, it will give a response to the central server, and this response message will go back to bank B, and bank B would now understand that at the central bank their account has been credited, and bank B now needs to credit this money to the beneficiary who is having account with that bank. Now again, what kind of message would bank B receive? It again depends on whether we are having the empty messages which are being used or the MX messages which are being used. In some countries like target 2, this message may be the empty 910, that is the confirmation of credit. In some countries we may simply forward the same settle message, like in LVTS in Canada, we may forward the same empty 103 or an empty 205 onwards to bank B to tell them that your account has been credited. So which messages are to be used will depend on the scenario created by the CSM, that is the clearing and settlement system. So what we are going to use in this are different types of Swift messages. They'll be created in line with the requirements of the CSM, and they would be structured as per the rules and regulations given by Swift. So this is one example we have seen where Swift can be used for a large value system like RTGS. Let's move to the next part of the discussion. I'm going to discuss now the Swift MT1 series. In Swift MT1 series, there are various types of messages which are used. You see a couple of messages on the screen in red screen. These are the most popular messages which are used across for making payment. The first one which you see on the screen is the category 1 message. Now in this category 1 message, you have request for transfer. This request for transfer is a message which is required to be sent by one financial institution on behalf of a non-financial institution account owner. The typical idea is that there may be a corporate or some customer who wants his or its bank to send the money across further. For that purpose, the MT101 is used. It is used to move funds from the ordering customer's account, which is serviced at the message receiving financial institution, and then that institution will forward that money onwards to somebody else defined in that message. Now we'll have a discussion of subsequently on how this message is used, but typically this is a request for transfer. You're requesting your bank to move money from your account to somebody else. That is the idea or logic of having an MT101. Similarly, the next message we have is the SWIFT MT102. MT102 is a multiple customer credit transfer. Now this message is sent by or on behalf of a financial institution of the ordering customer to another financial institution for payment to the beneficiary customer. Typically, when we want to move multiple payments or multiple payment instructions between financial institutions, then we will use this message to convey those multiple payment instructions. And this is to be used only for clean payments. MT102 is subject to bilateral and multilateral agreements between the sending bank and the receiving bank. So this is the second message, in which example could be you want to pay salaries. Your customers' salaries can be distributed across institutions by creating an MT102. The third and one of the most important messages used in payments is the MT103. The MT103 comes in different categories. You can have a normal MT103, or you can have a straight through processing related MT103. Older version may be called as the SWIFT Remit, or some people may use the word SWIFT Plus. Now when you have the SWIFT MT103, it is the single customer credit transfer. This message is actually used to convey a fund transfer instruction in which the ordering customer or the beneficiary are non-financial institutions from the perspective of sender. The fourth message is the MT104. MT104 is the direct debit and request for debit message. This message actually is used to get money, pull money out of some other institution. For example, I am having my home loan account with one bank, let's say Bank A, and I'm having my savings account with Bank B. Bank A may send a message in respect of my home loan installment to another bank, that is Bank B, asking that bank to debit my account and pay the money to my bank where I am holding my home loan account. So 104 is a pull message, whereas 103 is a push message. You push money to somebody else. 105 is the AD packed envelope. 107 is general direct debit message. Then we have 110 as an advice of checks. 111 is a request for stop payment of checks, and 112 is status for a request for stop payment of checks. Now I'm not going into checks because worldwide there is a move away from checks. That is number one. And secondly, our discussion is focused more on the messages, not on the particular transactions of checks. So to summarize, we will have MT1 series used when any party in the payment chain is a non-bank. That means when we are moving money between various parties, and in that chain there are various parties, if any one of those parties is a non-financial institution, a non-bank, then we are going to be using the MT1 series of messages. Now there is a common series also available, but then I'll discuss the common series a little while later, because common series will be applicable to all different types of payment messages. The second type of messages which we're going to talk about are the SWIFT MT2 series. MT2 series is to be used when every party in the payment chain is a financial institution. So in simple words, this is to be used when everybody is in that payment chain is a bank. The first message which you have in this series is MT200. MT200 is the financial institution transfer for its own account. This is used to request the movement of funds from an account that the financial institution holds with one bank to another account which the financial institution holds with some other bank. It has to be in the same currency and it has to be with some other financial institution. So if I am bank A having an account with bank B, and from my account with bank B I want to move the money to my own account elsewhere or even within that institution, I will be using MT200. MT201 is the multiple financial institution transfer for its own account. So it is like 200 only. The only extra thing here is we can send the payment message simultaneously to multiple institutions. So I can, using single message, we can send this message to our account holding institution that move this money to 1, 2, 3, 4, 5 different banks where I, that is my bank, holds an account. The red messages which you see on the screen are the popular ones which are normally used in the payment systems. The next and one of the most important ones is the MT202. MT202 is a message for general financial institution transfer. MT202 is used to move funds from one bank to another bank. This is sent by or on behalf of the ordering institution directly or through its correspondence to the financial institution of the beneficiary institution. That is the logic of this message. MT202 cover is a message which has to be used for covering the transactions in respect of customer to customer payment. This is sent by or on behalf of the ordering institution directly or through correspondence again. This is used to order the movement of funds related to an underlying customer credit transfer. So 202 cover and even that 205 cover which you see at the bottom of the screen, these are used in respect of movement of funds related to underlying customer credit transfer that is sent with the cover method. So 202 cover typically is a message covering the information in respect of an MT103. 202 and 202 cover are slightly different messages. Prior to 2009, there was only one kind of message, that is 202. But this 202 pure does not cover the information, does not include the information about the parties in respect of whom the money is being moved, in case you are using it as a cover mechanism. 202 cover was introduced to overcome this issue that 202 does not include all the details. The cover message includes all the details of the sender of the message and the sender of the money and the beneficiary of the money. And because of 202 cover, it becomes easier for someone to carry out the process of verification in respect of money laundering. 204 is a pull message like this 104 which we discussed earlier. It's a financial markets direct debit message. A system, RTGS system, normally pushes money, but RTGS system like Target 2 has an exceptional feature that it allows an MT204 also to be used for the interbank transaction purposes. It is with the central bank mandate and there are certain restrictions when you use the MT204 in Target 2 scenario. 205 is the financial institution transfer execution. This message is used for moving money domestically. The large value transfer system in Canada uses this 205 to move money. This message is used to transfer fund transfer instruction where the sender and the receiver are located in the same country. So as I said, the large value transfer system in Canada uses the 205 rather than 202. The Target 2 system in SEPA uses 202. The Canadian system uses the 205. 205 cover is like the 202 cover which we discussed earlier. And MT210 is the notice to receive. Now there is another message also in between, that is 207 is the request for financial institution transfer, and then 210 is notice to receive. There is 256 also, which is advice of non-payment of checks. Now let's briefly talk about the notice to receive. This message is an advance notice to your bank. It tells your bank that your bank is expecting some funds which are to be credited to your account. So if you expect some large amount of money to come in your bank account, you will intimate your bank by sending this 210 that you are expecting some funds in your own account with that particular bank. So this is the notice to receive, which is used in the banking system. Now we have talked about two categories of messages. Empty one, as I said, is to be used when customer related payment transactions are done. Empty 2 series is to be used when we are having bank to bank transactions. The next one is the empty 9 series. Empty 9 series is mainly response or status series. You can say generally that empty 1 series and empty 2 series are value messages. That means they move money from a place to another place, whereas empty 9 series is a non-value message, meaning it tells you what has happened. It is post facto. It is after the transaction has been completed. You get this information through empty 9 series. Now empty 9 series also has a large number of messages. We'll talk about the red ones because they are important mainly from the perspective of payments. Empty 900 is the confirmation of debit. Now when your account gets debited or your bank makes a payment out of your account, it is going to send you an empty 900 message. If your account with the bank is credited, your bank where your account is credited will send an empty 910 message to you. So 900 indicates that your account is debited. 910 indicates that your account has been credited. 940 is a message which tells you about the statement of transaction. It provides you the statement of transactions in your account. 941 gives you balance as of a time in your account. 942 is a periodical interim transaction report of whatever has happened in your account. 950 is a statement again. The difference between 940 and 950 is 940 is a customer statement message typically sent to a person who is authorized the account holding institution, and the message is sent to a person who is authorized by the account owner to receive it. So if you are owning an account with a bank and you authorize somebody else to receive your bank statement, that person will receive 940. If you are holding an account with your bank, then your bank will send you a 950 statement. So the account owner will get 950 and the person authorized by the account owner will be receiving the 940 message. So before you want to do a transaction, you'll have to create that transaction by either using empty 1 series or empty 2 series, and once your bank executes that transaction, you'll get an empty 9 series response from your bank. The response may be transaction wise, like empty 900 and 910 will be for every transaction, or you may get a statement like empty 940 or an empty 950. Now we have understood the empty messages. Let's have an example of how these empties could be used. Now on the screen I have got an employer in a green circle. The employer has an account with the Golden Bank. The employer wants to pay salaries to the employees. Some of the employees are having account with Diamond Bank and some of the employees are having account with the Silver Bank. Now let's understand how the transaction would happen. Now employer is going to request his bank that make a payment. So he sends a file, some document, some transaction data saying that salaries has to be paid for this particular month to my employees. Some of them have account with the Diamond Bank, some of them have account with the Silver Bank. Now our assumption in this scenario is that Golden Bank has a relationship with Diamond Bank. So when Golden Bank receives this instruction from the employer, Golden Bank is going to debit the account of the employer and credit its own account which it has with Diamond Bank. That is because Diamond Bank is going to debit Golden Bank while they make the payment of salaries to the employee. Once Golden Bank passes the necessary accounting entries, does all the validations, it may do even the AML anti-money laundering check, it will then generate a message empty 103 which is asking the Diamond Bank to make the payments. Now if you recall what we discussed earlier, empty 103 is a multiple customer credit transfer. Golden Bank through this message 102 is telling Diamond Bank that you need to make payment to various employees who are having account with you, that is Diamond Bank, as well as with Silver Bank. When Diamond Bank receives this message empty 102, it is going to debit the account of Golden Bank and then credit the account of the respective employees. This is where on-book transfer of salaries has happened at Diamond Bank. Diamond Bank also understands that it needs to make the payment to some employees having account with the Silver Bank. In that respect, they will generate a MT103. Now here we are talking about a single employee. It generates an MT103. We are assuming that we are making this payment through Target 2, the RTGS system in SEPA, the single euro payment area. When Target 2 in SEPA receives this MT103 from Diamond Bank, at Target 2, they will have the account of Diamond Bank as well as the settlement account of Silver Bank. Target 2, on receipt of this MT103, will debit Diamond Bank and credit the account of Silver Bank, and in Target 2 they use MT910 to intimate Silver Bank that its account has been credited. Once Silver Bank receives this MT910, it will check the balances with Target 2 system and then credit the account of the employees. In this manner, we can be using multiple messages like MT1 series, 102 and 103 as well as MT910 to indicate the credit, the confirmation of credit given to Silver Bank. This is one example of how MTs could be used in SWIFT for moving money from one place to another place. Now in this entire example, we have used SWIFT messages. The actual payment has happened either at the Diamond Bank through book transfers or through the clearinghouse. The clearing process is not handled directly by SWIFT. SWIFT may provide the backbone, but actual process has to be carried out by the clearing system. Let's now look at the feedback which Diamond Bank gives to Golden Bank. Diamond Bank debited the account of Golden Bank and therefore it is now sending a confirmation of debit, that is MT900, and at the end of the day it will send an MT950 indicating the transactions, all transactions of debit and credit which have happened in the account of Golden Bank. So this is where we have the MT9 series used to move money. So as I said, MT900 is transaction specific confirmation of debit and MT950 is the message indicating that indicating all transactions or giving details of all the transactions which have taken place in the account of Diamond Bank for that particular day. Let us now move to MX messages. Now in MX series, which is an ISO 20022 Universal Financial Industry Messaging Scheme, there are two important payment message types. First one is the PAIN, second one is the PAX. PAIN is the payment initiation and PAX is payment clearing and settlement. There is another category also which I talked about in the beginning, and that is the CAMT, the Customer Account Management. PAIN is like series 1, little bit like series 1 which we saw in the MT. PAX is also including series 1 and series 2. PAIN is a message which is exchanged between a corporate and the bank. And PAX are those message types which are exchanged between bank and the clearing and settlement mechanism. To repeat, PAIN are between a bank and its customer, and PAX are between bank and the clearing and settlement system. So the objective of using the messages is different. Payment initiation messages create a payment. So example of that could be the PAIN 001, which is a customer transfer initiation. So in the last example, we saw an employer telling Golden Bank that we want to pay salaries. That employer can generate a PAIN 001 and tell the bank concerned that we would like to initiate this payment. There are various types of PAIN messages which you can see on the screen. PAIN 001, PAIN 002, 7, 8, 9, 10, 11, 12, 13 and 14. Each of them have different usage. Like PAIN, we also have another series which we said is the PAX, the Payment Clearing and Settlement. We have PAX 002, which is an FI to FI, the financial institution to financial institution payment status report. 003, 004, 007. What is important and many times used in RTGS systems could be PAX 008 and PAX 009. We will also have a look now at how MX messages can be used to make a payment. I am having on the screen Alpha LLC, who is a buyer, who who has purchased some goods, some services from Delta LLC, which is the seller. Alpha has its bank account with Golden Bank and Delta has its bank account with Diamond Bank. Alpha now wants to initiate a payment. So Alpha will initiate a payment by using the message called PAIN 001, which is saying that pay this particular vendor Delta having account with Diamond Bank. We also assume in this case that we are using the RTGS system, and here I have chosen this example of RTGS system in India, which is operated by the Reserve Bank of India. The Indian RTGS currently uses the MX category of messages. So Golden Bank now creates a PAX message 008. The message tells the Reserve Bank of India that we would like to pay vendor Data LLC having account with Diamond Bank. When the RTGS system, the real-time gross settlement system, receives this message PAX 008, at RTGS system we'll have the settlement accounts, RTGS settlement accounts of Golden Bank and Diamond Bank. When PAX 008 is received, the RTGS system would debit the account of Golden Bank and credit the account of Diamond Bank. Once this process is completed, the message would be forwarded onwards to Diamond Bank that we have credited your account, that is PAX 008. On the basis of this credit advice received by Diamond Bank would credit the account of Delta Bank. This is optional, but some countries would provide a response also to the concerned parties, and in that case RTGS system may give a feedback to Golden Bank that their account has been debited, and the message, the MX message type used in that would be the CAMT 054. In this manner we can use a Swift MX message in order to carry out the process of payment. Now what we have seen, let me have an overall view of what we have discussed in this session. Today what we discussed in this session is what is Swift, what is the role of Swift in the banking and corporate systems, and we said that it is basically the messaging system. It provides robust service, secure service. It is also providing some other services. We also spoke about the usage of Swift MTs and MX. We looked at what are the messages in MT1 series, MT2 series and MT9 series. We also looked at messages which are available in MX series, especially the PAX messages and the PAIN messages. We had a look at how MT messages can be used to make payments. We also had a look at how MX messages can be used for payments. So to summarize, we can say that Swift not only provides messaging so far as payments is concerned or payments are concerned. In many countries they provide the infrastructure, the network and the backbone required for processing of payment transactions. Globally, Swift is a major player in payments and payments messaging. Now with this I come to a conclusion of our discussion on what is Swift and Swift's role in payments. If you have any questions, any doubts which you want to ask me, you can go ahead now. How to authorize a direct debit request is a question from Delan. Delan, welcome to the session. I hope to see you once again in India. Now let me answer this question. Now authorization of direct debits comes through two ways. Of course there could be a CSM related mechanism, but there is a data driven mandate and a creditor driven mandate. In single euro payment area, the mandates have to be exchanged between the banks, and then the sending bank, that the one who is sending either the 104 or 204, would intimate the mandate information, or the mandate could be stored with the incoming bank. If you look at the direct debit messages, it would talk about two things. It will say direct debit and a request for direct debit. We need to distinguish between both these. Direct debit does not expect a response to come back from the institution which is receiving that message, whereas the request for direct debit expects a response from the institution who is receiving that direct debit messages. So the authorization in many countries would come through a creditor driven mandate. That means the party who's originating that transaction would have the mandate. For example, if your mobile phone company is going to bill you, the mobile company will hold a mandate which is signed by you, and that would be shared by the mobile company with its bank, and that mobile company's bank would transfer the information about mandate, the authorization, to your own bank. Another alternative is the data driven mandate. In the data driven mandate, the information would be handed over by the customer, the data, to his bank, and when an instruction comes in, his bank would check it with the mandate given by its own customer, and based on that the authorization will come. So on this basis, Delan, the transaction would be carried out of authorization. In some countries like USA, where in ACH the authorization can be in many other ways. There could be oral authorization, or there could be a documented authorization. So the answer to your question could be there could be country specific scenarios also where the authorization may move in a different way. Do you have any other question? So with this, we now conclude our session on Swift for payments. I would like to thank all the participants for participating in this session. So thanks a lot. Enjoy your rest of the day.